Happy Valentine's Day, everyone. It's the day of chocolates and roses.
Yeah,
But I have a feeling some of you are more interested in a different kind of love story, the kind that plays out on the stock market.
for sure.
And today we have a real nail biter on our hands, Jet.AI,
Oh, yeah.
ticker symbol JTAI.
Yep.
This company's stock history is enough to give anyone heart palpitations.
It's certainly been a roller coaster.
Really?
Over the past year, Jet.AI's stock has swung between a low of $2.30 and a dizzying high of $315. Volatility is an understatement.
Wow. Hold on to your hats, folks, because there's more. Recent news has sent the stock skyrocketing fly exclusive,
Oh, wow.
ticker symbol FLYX,
Okay.
is buying Jet.AI's aviation business.
Interesting.
Now that leaves us with a big question. Is Jet.AI a high-flying opportunity or a recipe for disaster? Let's investigate.
This move is actually part of a much larger trend. We're seeing companies across the board streamlining their operations, focusing on their core strengths to become more adaptable. It's all about staying agile in today's dynamic market.
So Jet.AI is essentially ditching the planes and pivoting to become an AI powerhouse.
Precisely. They're spinning off their aviation operations into a new company, which they've aptly named Spinco.
Okay.
And Fly Exclusive will then acquire Spinco. This leaves Jet.AI as a pure-play AI company.
Interesting. So what are the specifics of the deal? What does it mean for people who already own JTAI stock?
It's an all-stock transaction valued somewhere between $12 million and $22 million.
Okay.
The deal includes a premium of 115 to 120%. And here's the kicker. Jet.AI shareholders get to keep their existing stock and receive new Class A common shares in Fly Exclusive. Sounds like a pretty sweet deal, wouldn't you say?
It sounds promising, but is it really all sunshine and roses for current JTAI investors?
Well, it's not quite that simple. The premium certainly suggests that Fly Exclusive sees real potential in Jet.AI's future as an AI company.
Right.
And the fact that shareholders get to keep their existing shares is a definite plus. However,
Yeah.
we need to consider the stock's notorious volatility. Remember that incredible price range we discussed earlier?
Uh-huh.
That level of fluctuation should be a warning sign for anyone considering investing in JTAI.
You're right. On February 14th, the stock jumped a whopping 139.92%. That's a phenomenal gain. But as you said, it's been known to plummet just as drastically?
Exactly. This type of volatility can be a dream come true for short-term trainers who are skilled at riding the waves.
Right.
But for those seeking long-term growth, it's a completely different story. Caution is key.
So we have some mixed signals here. Let's see if technical analysis can shed some light on the situation. What are the charts telling us?
If we look at the short-term moving averages, they seem to be shouting buy, but then we glance at the long-term moving averages,
Yeah.
and they're clearly signaling sell. It's enough to make your head spin.
It sounds like those technical indicators are sending us mixed messages. Can you break it down for us a bit further? What does a buy signal from the short-term moving averages actually mean for the average investor?
Well, in simple terms, short-term moving averages reflect recent price trends.
Okay.
When they indicate a buy, it suggests that the stock's price has been trending upwards in the short term. However, long-term moving averages tell a different story.
Okay.
They smooth out price fluctuations over a longer period,
Yeah.
giving a broader perspective on the stock's overall trend. A sell signal from long-term moving averages indicates a downward trend over a longer time frame.
I see. So even the technical indicators are painting a complex picture for JTAI.
Yes.
What about other factors like the RSI,
Uh-huh.
MACD, and Bollinger Bands? Can they offer any additional clues?
These indicators provide even more nuance to the analysis. The RSI, or Relative Strength Index, measures the magnitude of recent price changes to evaluate overbought or oversold conditions. Currently, the RSI for JTAI is in neutral territory, suggesting neither strong buying nor selling pressure. The MACD, or Moving Average Convergence Divergence, is a trend following momentum indicator.
Okay.
Right now, the MACD shows a slight bearish momentum hinting at a potential downward trend. And finally, we have the Bollinger Bands, which measure volatility. For JTAI, the Bollinger Bands are wide and erratic, reflecting the stock's unpredictable price swings.
Okay, so even for seasoned investors, this is a lot to digest.
Yeah.
It sounds like JTAI is definitely not a stock for beginners. It seems like this company requires a deep understanding of the market and a stomach for risk.
Absolutely, and we can't ignore the fact that Jet.AI at this moment is not profitable. Their earnings per share are negative, standing at a rather alarming negative 191.17.
Wow.
Combine that with a small market cap, and we have some classic red flags for investors.
You mentioned earlier that context is key. Could you elaborate on what might be contributing to Jet.AI's negative earnings per share?
Well, keep in mind that Jet.AI is in a major transition phase. They're shifting from an aviation-centric business model to a purely AI-focused company.
Okay.
This kind of transformation involves significant cost restructuring and potentially even write-offs,
Yeah.
all of which can impact earnings per share.
So these negative earnings might be a temporary side effect of their strategic shift.
It's certainly a possibility. We need to analyze their financials over time rather than fixating on a single snapshot.
Good point. What about their market cap of around $12 million? That seems relatively small, especially compared to other tech companies.
You're right. It indicates that Jet.AI is still a relatively small player in the market. But let's not forget that size isn't everything. Smaller companies can be more nimble, more innovative, and they often have the potential for explosive growth.
It's the classic David versus Goliath story, right? The underdog with the potential to disrupt the industry.
Exactly. But of course, there's always the risk that David gets squashed by Goliath.
That's the risk inherent in any investment, I suppose. What other financial clues should investors be paying attention to when evaluating a company like Jet.AI?
We need to look beyond market cap and earnings per share. Revenue growth, debt levels, cash flow, and operating expenses are all essential indicators of a company's financial health.
So our listeners have some homework to do.
Yeah.
Time to dive into those financial statements. Where can they find this information?
Jet.AI's quarterly and annual reports are publicly available, and numerous financial websites provide comprehensive summaries and in-depth analyses.
All right, listeners, consider that your assignment for the week. Dig into those reports, and remember, even if the current numbers aren't dazzling, the key is to assess whether Jet.AI's management team has a viable plan to turn things around.
Exactly. We need to look for evidence of a solid strategy, not just quick fixes or empty promises.
Now let's bring the fly-exclusive acquisition back into the equation. How does this deal factor into the financial picture for Jet.AI?
That's where things get really fascinating. The deal is valued between $12 million and $22 million for a company with Jet.AI's current market cap. That's a significant sum. This acquisition could be a make-or-break moment for them.
So the stakes are high. What are the potential benefits and risks associated with this acquisition?
On the one hand, by spinning off the aviation business, Jet.AI can streamline their operations and dedicate all their resources to AI, which they believe holds the greatest potential for growth. It's a bold move, but it could pay off handsomely.
It's like they're shedding their own skin and transforming into a completely new entity.
That's a fantastic analogy. They are essentially getting a cash infusion from the sale of SpinCo, which can be used to fuel their AI ambitions.
Sounds like a win-win situation, but I'm sure there are downsides as well. What are the potential pitfalls?
Well, the AI market is incredibly competitive, and there's no guarantee that Jet.AI will succeed in carving out a profitable niche. They are going head-to-head with established tech giants and a wave of innovative startups. Plus, there are still unanswered questions about the details of the fly-exclusive deal. Are there hidden liabilities? Are there earn-out clauses that could affect Jet.AI's future earnings? These are crucial questions investors need to investigate.
So there's still a lot of unknowns surrounding this acquisition. Listeners, grab your magnifying glasses and get ready for some detective work. Dive into the fine print of that acquisition agreement and see what you can uncover.
Absolutely. This is where due diligence is crucial.
All right, so after factoring in all these variables, their strategic shift, the volatility of their stock, their current financial situation, and the fly-exclusive acquisition, what's the verdict on JTAI? Is it a buy, sell, or a hold?
Honestly, after diving into these details, I'd say it's even more of a mixed bag than before.
What does that mean for investors trying to make a decision?
It boils down to individual risk tolerance and investment goals.
Can you break that down for our listeners?
For short-term traders who thrive on volatility and are skilled at timing the market JTA, I could present some exciting opportunities. However, for those seeking long-term steady growth, I'd advise extreme caution. This is not a stock for the faint of heart.
So it's a gamble, but potentially one with a big payoff.
That's one way to put it, high risk, high reward potential.
Sounds like we might need to consult a fortune teller for a definitive answer. But before we resort to that, there's one more critical aspect. We need to explore Jet.AI's AI solutions. What exactly are they offering, and what's their plan for bringing these solutions to market?
That's an excellent question, and it's one we'll address in the next part of our discussion on Investing Talk podcast.
Don't go anywhere. We'll be back to delve into Jet.AI's AI solutions and analyze their potential impact on the aviation industry.
Welcome back to Investing Talk podcast. We're ready to unpack Jet.AI's AI solutions and see if they live up to the hype.
All right, listeners, let's put ourselves in the shoes of a potential investor. What makes Jet.AI's foray into AI so compelling? What problems are they trying to solve, and why should we care?
Imagine a world where aviation is not just about getting from point A to point B, but about optimizing every single aspect of the journey using the power of AI.
Like a flying supercomputer. Sign me up.
You're getting the idea. Jet.AI aims to leverage its deep aviation experience to create AI solutions that enhance safety efficiency and sustainability in the industry.
Okay, those are some big promises. Can you give us some specific examples of how they plan to achieve this?
Absolutely. Think about predictive maintenance for aircraft. AI can analyze data from sensors and systems to anticipate potential issues before they even arise, leading to reduced downtime and significant cost savings for airlines.
That makes sense. A grounded plane isn't making any money. What else?
Another area they're exploring is AI-powered flight planning. This involves optimizing routes for fuel efficiency and reduced emissions, which is a win for both the environment and the bottom line.
So they're not just trying to replace pilots with robots. They're trying to create systems that make pilots' lives easy and flights more efficient.
Precisely. They're also looking at applications for air traffic management, cargo optimization, and even personalized passenger experiences. The possibilities are vast.
This is starting to sound really impressive, but the million-dollar question is, who are they selling these AI solutions to?
That's where the strategic partnerships we talked about earlier come into play. Airlines, airpress manufacturers, airports, even government agencies are all potential customers for Jet.AI's AI solutions.
So they're not starting from scratch. They already have connections with some major players in the industry.
Exactly. That's a significant advantage in such a competitive market. Their experience in the aviation world gives them credibility and a deep understanding of the industry's unique needs and challenges.
There's always but what about the competition? The AI space is crowded, especially with the rise of Chinese companies. How can Jet AI stand out from the crowd?
That's a valid concern. However, Jet.AI is focusing on aviation-specific AI solutions, which gives them a clear niche. They're not trying to be everything to everyone. They're targeting a specific market with tailored solutions.
So they're not a one-size-fits-all AI company. They're more like a boutique firm specializing in bespoke solutions for the aviation industry.
That's a great way to put it. And just like a high-end boutique, their specialized expertise and industry knowledge could command a premium price.
I'm starting to see the potential here, but what would you say is the biggest hurdle Jet AI faces in achieving its AI ambitions?
I'd say execution is paramount. They need to prove that their AI solutions are more than just hype. Can they actually solve real-world problems and deliver tangible value to their customers? That's the real test.
So it's not enough to just have fancy technology. They need to demonstrate that it works in practice and that people are willing to pay for it.
Exactly. They also need to be adaptable and innovative because the AI landscape is constantly evolving. What's cutting edge today could be obsolete tomorrow.
It's a race against time, a race against their competitors, and ultimately a race against themselves to execute their vision effectively. It seems like this acquisition from Fly Exclusive could be a game changer.
It certainly has the potential to be. Remember, the deal involves spinning off Jet.AI's existing aviation business into a new entity called SpinCo. This move allows Jet.AI to focus solely on AI development while also providing a financial boost through the acquisition.
So it's like they're shedding their old skin, transforming into a leaner, more focused entity with a laser focus on AI.
Exactly. This could be a strategic masterstroke if executed correctly. By divesting their aviation assets, they're essentially doubling down on their AI ambitions.
It's a bold move, that's for sure. But let's not forget the risks. The AI market is incredibly competitive, and there's no guarantee of success.
You're absolutely right. The success of this strategy hinges on several factors: their ability to develop truly innovative AI solutions, their success in securing contracts with major players in the aviation industry, and their ability to navigate the complexities of the Fly Exclusive acquisition.
So it's a high-stakes game with potentially huge rewards, but also significant risks. This is what makes Jet AI such a fascinating case study. It's a company in transition, navigating a rapidly evolving technological landscape and making bold bets on its future.
Exactly. And this is what makes investing so intriguing. It's about analyzing these complex situations, weighing the potential rewards against the inherent risks, and ultimately making informed decisions based on your individual investment goals and risk tolerance.
We've covered a lot of ground today, from Jet AI's strategic shift to their financials, their foray into AI, and the Fly Exclusive acquisition.
It's been quite a journey, but remember, we've only just scratched the surface.
There's always more to explore. What's next on our agenda for Investing Talk podcast?
We'll be right back after a short break to wrap things up and offer our final thoughts on Jet AI. Stay tuned.
Welcome back to Investing Talk podcast for the final leg of our journey exploring Jet AI.
We've analyzed their strategic shift, scrutinized their financials, and delved into their ambitious AI ventures. Now it's time to bring it all together and offer our concluding thoughts.
Okay, let's recap. We've established that Jet AI is a company undergoing a major transformation, pivoting from aviation operations to focus solely on AI solutions.
Their stock has been on a wild ride, swimming from a low of $2.30 to a high of $315 in just a year. That's volatility you can't ignore.
And then there's the Fly exclusive acquisition, which adds another layer of complexity to the story. Spinning off their aviation arm could be a brilliant move, allowing them to focus on AI while also getting a financial boost.
But it's not without risks. The AI market is fiercely competitive, and success is far from guaranteed.
So for investors listening, what's the takeaway? What should they be considering when evaluating Jet.AI?
First and foremost, understand that this is a high-risk, high-reward scenario. Jet.AI is a bet on the future of AI in aviation. If their solutions gain traction and they carve out a significant market share, the potential upside could be enormous.
But if they stumble, if the technology doesn't deliver, or the market shifts in an unexpected direction, the losses could be substantial.
Exactly. This is not an investment for the risk-averse. It requires a deep understanding of the AI landscape, the aviation industry, and a willingness to embrace volatility.
What about those strategic partnerships we discussed earlier? Could those be a deciding factor for investors?
Absolutely. Jet.AI's collaborations with industry giants like Textron Aviation and Bombardier could be a major asset. These partnerships provide credibility, access to resources, and a potential pathway to market.
It suggests they're not just an AI startup trying to break into a closed industry. They already have established relationships and a track record in aviation.
Precisely. Those partnerships could be crucial for securing contracts, scaling their solutions, and ultimately achieving profitability.
So if an investor is considering Jet.AI, what should they be looking for as signs of progress? What are the key indicators to watch?
Keep a close eye on their partnerships. Are they expanding their collaborations? Are they securing significant contracts with major airlines or aviation companies?
Those would be positive signals that their AI solutions are gaining traction in the market.
Also, pay attention to their financials. Are they making progress towards profitability? Are they managing their cash flow effectively? Are they investing wisely in research and development?
And of course, stay informed about their AI solutions themselves. Are they delivering on their promises? Are they solving real-world problems for the aviation industry? Are they staying ahead of the curve in a rapidly evolving technological landscape?
Those are all crucial factors to consider. Investing in a company like Jet.AI is not just about looking at numbers on a spreadsheet. It's about understanding the story they're telling, the vision they're pursuing, and their ability to execute on that vision.
So would you invest in Jet.AI?
As an AI expert, I'm incredibly excited about the potential of AI to transform the aviation industry. And Jet.AI, with its strategic focus and industry partnerships, is well positioned to be a leader in this space.
But as an investment advisor, I always emphasize the importance of careful due diligence, understanding your risk tolerance, and aligning your investments with your long-term financial goals.
Sage advice: investing is never a one-size-fits-all proposition.
Well said. We've covered a lot of ground today, exploring the exciting and sometimes bewildering world of Jet.AI.
It's been a fascinating journey.
We hope you found this episode of Investing Talk Podcast insightful and informative. As always, we encourage you to do your own research, consider your risk tolerance, and make investment decisions that align with your individual financial goals.
And don't forget to subscribe to Investing Talk Podcast, share this episode with your fellow investors, and leave us a comment below with your thoughts on Jet.AI. Would you invest? We're eager to hear your perspectives.
Until next time, stay curious, stay informed, and invest wisely.